What catches the eye isn't always worth its weight. Nowhere is that more true than today's equity market. Recently, we have seen sharp moves and sudden reversals that seem to come out of nowhere. But the truth is, markets rarely move out of nowhere. Just like the body gives subtle signals before a louder sound emerges, the market has its own version of Borborygmus. That's a real word. Quiet rumblings beneath the surface before momentum becomes visible. One of the most misunderstood features of public markets is momentum, and momentum often starts long before anyone sees it on a chart. It begins as a low, almost imperceptible rumble, a market Borborygmus, fueled by noise, conviction, speculations, and sometimes outright panic. See, when bad news hit and an initial downward drop, that's the loud part. The quieter part, the buildup, happens internally. Speculators positioning ahead of headlines, short sellers waiting for a spark, investors reacting emotionally before rationally. But in most cases, nothing material has changed inside the company. Strong earnings, strong fundamentals, yet the stock dipped sharply. The rumble beneath the surface? Well, that's crowded positioning, stretched expectations, and fast money ready to exit on the first hint of weakness. The loud reaction was simply the market's Borborygmus finally being heard. The equity market doesn't move randomly, it moves in themes. AI, weight loss drugs, semiconductors, energy transition. Pick any recent cycle and you'll find similar patterns. A quiet idea starts somewhere small, gains repetition, builds belief, and eventually becomes loud enough to influence flows. It is hard to pinpoint the origin of a theme cycle. It can be a CEO highlighting a buzzword on an earnings call, a new piece of technology going viral, or a storyline financial media amplifies because it sounds investable. Once the rumble starts, it travels down the chain, from institutional desks to analysts to media to advisors, all the way down to investors. By the time it reaches the end of the chain, it is no longer a faint sound, it is a dominant narrative. The quiet becomes loud and the Borborygmus becomes momentum. In a market where nearly 40% of the S&P 500's movement comes from just 7 companies, these rumblings get amplified dramatically. When positioning is crowded, when expectations are stretched, when a handful of names carry the index, the smallest narrative shift can produce an outsized move. The market hears the rumble long before fundamentals move, which brings us back to the question, what is anything really worth? In today's environment, the answer often has to do with who's reacting, how crowded the trade is, and how loud the market Borborygmus has become. So as we watch the recent volatility unfold, remember, momentum begins quietly, narrative begins subtly. Rumbles become movements regardless of balance sheets or earnings change. While long-term investors keep note of the news and listen for the rumblings beneath it, they purposefully allocate with long-term objectives in mind. I'm Tammy Beck. See you in the next video.